Welcome back. Five-star business finance is on our radar now. For the first quarter, their business momentum has been strong. AUM growth has been solid. However, net interest margins have declined sharply sequentially. Mr. Lakshmipathy Deenadayalan, Chairman and Managing Director at Five-Star Business, is joining us now to take some questions. So good morning. Great to have you with us here. Thanks for your time. I just want to start with the net interest margin decline. We've seen that not just with you, but many other companies who've reported in your space. Could you tell us why did NIMs decline so sharply? What are you seeing in Q2 so far, and what's the outlook?
Thank you, Prashant, for this. So let me give a clarity on the NIMs. I think the NIM has not contracted. It has been maintained. But what has happened is once your leverage kicks in, when you borrow more debt, historically, if you see our leverage was sub 1%. As we speak in the quarter of June, our leverage has touched 2%. So once you kick in more leverage, more and more debt is being used in the system. So your NIMs will be contracted. It is a natural process. There's nothing, there's no compression from a spread perspective. There is no compression from a lending perspective. In fact, our borrowing costs are very sweet and attractive. So I think there is nothing to be specifically mentioned on the NIMs, which is a bit down. This is just because of our leverage or debt equity picking up.
Where will they settle at though, sir? Net interest margins?
Yeah, I think what we have guided to the market, to the media channel is our NIMs will be settling around 14-15%. The spreads will be around 12 to 13%.
Okay. The business momentum, Mr. Deenadayalan, has been very strong. So you've seen a growth of almost about, disbursals have doubled year on year, and there's been an AUM growth of 43% year on year. What led to that? Which are the pockets which are growing fast? And what is the kind of sustainable growth that you're looking at by the end of FY24?
Our product is simple. We are lending to the unlent segment of this country. As I've been saying in your channel, a huge part of this country's, especially informal credit demand, is being met by the local money lenders and local family members, friends, and neighbors. That is where Five-Star goes and disrupts the market and moves the customer from this informal to formal. So this is a very abundant market opportunity, but very specialist, skilled players only can operate this market, because you don't have any background about the customers whom you're going to lend. That's why when you lend for a longer period of time, you have to judge the customer before you start lending. So the opportunity is always there. What we saw the momentum from last June, in fact, Five-Star's listing happened. We have crossed 4 full quarters. All the full 4 quarters, the momentum for Five-Star was very strong. I think that is where we also revised our guidance.
Okay, so when you say revise your guidance, what is the guidance that you're looking at by the end of the year on AUM growth in both FY24 and 25?
So we were guiding the market close to 30%. We have revised our guidance to 35%. That will take our AUM close to around 9,200 crores from around 6,900 crores where we settled in last March.
Okay, so you revise your guidance to 35% now from 30% earlier on the AUM front. Got that. What about credit costs? Can you tell us what is the guidance on credit costs and on the return ratios? Have you revised that as well?
No, I think credit costs will remain where it is. Our credit cost guidance to the market was around 1 to 1.25%. So that will remain steady. Because our underwriting and collection process, what we have been put in the place, is working excellently well. So we don't see anything getting disturbed there. And especially the cash flows of our customers are becoming stronger and stronger as we move past. So the credit guidance remains the same. And ratios, ROAs was around 8%. That will remain in the same 8% for a short period. But for a longer guidance, we are guiding around 6.5 to 7% ROA. That changes the ROE metric. Currently, the ROE is around 16.5% for the June quarter. That will move towards 20% plus in long run.
All right, sir, appreciate you stopping by and giving us all of those details. Wishing you all the best for the coming quarter, and we appreciate you joining in and giving us that guidance as well.